Hey everyone, welcome back to the channel. This is Stocks Telegraph, your go-to place for all the latest updates and insights on the stock market. If you're new here, make sure to hit that subscribe button so you never miss an update. And if you enjoy the content, don't forget to like the video and leave a comment below. It really helps out. Today, we're diving into a pretty exciting company in the energy sector, Uranium Energy Corporation, ticker UEC. Now, if you're into clean energy, uranium is becoming a pretty big deal, and UEC is one of the key players in the uranium mining industry. So in today's video, we're going to break down everything you need to know about UEC, from their financial performance to growth prospects, and whether this stock could be a good investment for you. Stick around, you don't want to miss this. Alright, so let's get right into it. Uranium Energy Corporation is in the uranium mining business, and as you probably know, uranium plays a massive role in the global push for cleaner energy. With more countries looking to reduce their carbon emissions, demand for uranium is definitely on the rise. And UEC, being one of the major producers, is in a prime position to capitalize on this trend. But what's going on with their stock right now? Let's take a closer look at their financials and future prospects. So as of today, UEC is trading at $7.42 per share. And analysts, they're pretty bullish on this one. The target price for UEC is set at $11 per share, which indicates a solid upside from here. Plus, when you look at the consensus recommendation from analysts, it's a strong buy with a rating of 1.00, meaning they're pretty confident this stock is a good pick. Now let's talk performance. Over the past year, UEC has gained about 15.22%, and in the last quarter alone, it's up 9.1%. Not bad, right? And get this, it's trading 16.91% below its 52-week high, which might be a good entry point for anyone looking to buy at a discount. But here's where it gets really interesting. UEC is on a growth tear. Analysts are expecting a 95.33% increase in earnings per share next year. That's huge, but the real jaw-dropper is their growth for the following year. It's projected to be a staggering 5,196.42%. Yes, you heard that right, nearly 5,200%. And if that wasn't enough, the company posted a massive 15,721.30% increase in quarterly revenue growth year over year. Talk about explosive growth, huh? Another thing that stands out is UEC's zero debt to equity ratio, which is a huge plus for investors who want stability. No debt means less financial risk, which is always nice to see, especially in a sector as volatile as uranium mining. Oh, and the stock's currently sitting just 3.75% above its 200-day moving average, so it's in a pretty stable position overall. But that's not all. UEC just made a big move to strengthen its portfolio. They recently completed a deal with Rio Tinto America to acquire 100% of Rio Tinto's Wyoming assets. This includes the Sweetwater plant, which is fully owned and licensed, plus a whole bunch of other uranium mining properties, including the Red Desert and Green Mountain projects. This acquisition is worth around $175.4 million in cash, which UEC funded using its available liquidity. This is a major milestone for the company, as it adds tons of resources to their portfolio and positions them even better in the competitive uranium market. Let's take a closer look at UEC's latest financial results. For the first quarter of fiscal 2025, the company reported an adjusted loss per share of $0.0. That's a bit higher than the $0.01 loss from the same quarter last year. But keep in mind that UEC is in a growth phase, so these losses aren't too surprising. What's more exciting is the company's revenue. UEC saw a huge jump in revenue from just $0.1 million in first quarter last year to $17.1 million this quarter. That's a massive increase, and it's thanks to UEC capitalizing on the higher uranium prices. They sold 210,000 pounds of uranium at an average price of $81.37 per pound, which is a solid result considering they didn't sell any uranium in the same quarter last year. However, with all that revenue growth, UEC did see an increase in costs. Their total cost of sales and services jumped to $10.8 million compared to just $0.09 million last year. They also had an operating loss of $13.2 million for the quarter, but that's still an improvement compared to the $11.4 million loss in first quarter last year. The good news is that UEC's cash flow is looking better. They reported using $11.5 million in cash from operating activities, way down from the $46 million outflow in the same quarter last year. This shows they're managing their cash better, which is a positive sign for investors. As of October 31st, 2024, UEC had $190.6 million in cash and equivalents, which is a big jump from the $87.5 million they had just a few months earlier. With this cash on hand, they're in a strong financial position to fund their projects and handle any market volatility. Now let's talk about UEC's operations. The company has recently resumed operations at its Christensen Ranch in-situ recovery mine. This is a big deal because it's a key part of their uranium production. UEC also announced they're expanding their production capacity at the Irigaray Central Processing Plant, which is set to reach 4 million pounds of uranium per year. Plus, they're making good progress on their Burke Hollow project, which will further boost their production in the coming years. And don't forget about their 4 key production pillars: the Irigaray, Hobson, Sweetwater, and Rough Rider projects. These are the core of UEC's operations and will provide a strong foundation for their growth moving forward. To top things off, UEC just got an upgrade from H.C. Wainwright. They raised their price target for UEC to $11, up from $10 to $5, and maintained a buy rating. So what do we think of Uranium Energy Corporation? Well, it's clear that the company is in a strong position to benefit from the rising demand for uranium and clean energy. They've got solid financials, explosive growth prospects, and a great portfolio of uranium mining assets. The recent acquisition of Rio Tinto's Wyoming assets only strengthens their position, and their cash reserves are looking solid too. If you're looking for exposure to the uranium sector, UEC seems like a solid pick. Analysts are bullish, and with their growing production capacity and impressive projects in the pipeline, UEC is definitely a company to keep an eye on. So, what do you think? Is UEC on your radar? Drop your thoughts in the comments below. We'd love to hear from you. And if you found this video helpful, don't forget to like, share, and subscribe for more market updates. Thanks for tuning in, and we'll catch you in the next one. See you next time on Stocks Telegraph. Stay informed, stay invested.